started with a pre-show for those of you who are here early. Appreciate you coming by a few minutes ahead of time. Whether you're new to trading or just new to our group, I want to welcome you to the opening playbook. The opening playbook is a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights, that's timely analysis of what's moving the markets right now, trading education to help build real skills beyond surface level tips and tricks, and live trade ideas, which are real-time recommendations that you can act on immediately. Opening Playbook is a free daily live webinar. And the stars of our show are Nathan and Graham. Nathan has over a decade of experience trading Forex stocks and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, overnight options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed his infamous wrap order option trades for cost-effective entries and has created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. A lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. However, we can make the learning process much easier. The opening playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding of the markets. It's important to always remember that you should never trade with money that you can't afford to lose. Nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please remember to keep your risks in check and never trade with money that you can't afford to lose. And let's be ultra clear, any type of trading will involve some losses. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise to you is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we think you should always follow. A few simple rules to start you off with are stay calm, as in trying to trade without emotion involved. It's very difficult. Go at your own pace. It's not a race. You don't need to keep up with us or other traders. Go at your own pace and ask questions freely. We really do want to answer your questions and help you as much as we can. To help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner that I'm about to pop up at the top of the screen. There you go. And for doing that, we'll be able to give you a couple of things. We'll be able to customize the content in Opening Playbook based on your feedback to provide better content suited for you. And we'll give you a free options cheat sheet, which is a digital, easy to understand options guide that looks something like this, but will be a lot less blurry when you get the actual thing. Now, I just want to take a couple of minutes for those that are new to Opening Playbook to talk about this platform that we're using. Obviously, it's a little different from a typical Zoom platform, and I want to help you get the most out of these webinars by showing you how to use this platform a little bit. You can click on the hamburger icon. That's what we call those 3 horizontal lines in the top left corner of the screen to reduce the size of that green column on the left. We don't need the green column, so the smaller it is, the more room we have for other things. In the bottom left corner of the display area, you'll see a little speaker icon. That is the mute and unmute button. If you do need to mute us for something, sorry, you can click that. Or if you find that you've suddenly lost audio, but the video is still going, you may have accidentally clicked or tapped on that speaker icon. So check that if you lose sound. In the bottom right corner, you'll see two different icons, or you may not see both or either of them. It depends on which platform you're running this software on. So if you see that double arrow there, that can be used to go full screen with the presentation area. We'll hide everything else and show you maximum size on the display. The square inside of a square is the picture in a picture. That will actually pop the video out into a small floating window so that you can do other things in the background, like go to your broker platform or another website. Now, as I said, you may see one, both, or neither of these icons depending upon what device you're on and which web browser you're using. You should all have this icon below the video presentation. It's a little monitor icon, and this will be good, I think, for most people to use. This will give you maximum size on the presentation area without hiding the chat. So you can still stay in communication with the chat, but see the presentation as big as possible. And next to that is this low latency slider. If you're having any performance issues where it's like buffering or kind of locking up a little bit with the audio or the video cutting out, click on that low latency slider. That will cause a few seconds delay in you getting the feed, but should smooth it out for you. And a few seconds probably won't make a difference. The whole column on the right is dedicated to communication with the chat. The big area in the middle vertically is where you'll see your chats as well as everybody else's. Keep in mind that this is a group chat. Whatever you type in this box at the bottom, it will go in that column and everybody will see it. So you would just type your message at the bottom and either hit enter on your keyboard or tap on that little green arrow to submit your message, and it will post in the group chat. However, there's a toolbar at the top which gives you some other options. The first one, which is the right arrow, although it's all the way on the left, will collapse the chat area. I don't recommend that because there's a lot of important things that happen in the chat. You probably want to keep the chat open. The megaphone or bullhorn icon will bring you to the announcements tab. The announcements will have any live trades that we've taken during the session, as well as a static set of helpful links. If you've never seen the helpful links, I highly recommend you check that out. And this double speech bubble icon is for private messaging. This is where you can send messages that the whole group will not see. When you click on that, you'll be able to private message any of the hosts. And if we send you a private message, you'll see a little red dot up in this green toolbar to let you know to flip over to this tab. So look for that little red dot up there occasionally to see if you have a private message waiting for you. And then if you want to get back to the group chat from either of these other tabs, you just click on the speech bubble with the three dots in it. Last but not least, we have this diagonal arrow icon. This will pop the chat out into its own floating window. So if you're using multiple monitors, let's say, and you want to go full screen on the presentation in one monitor, you can pop the chat out and have it on a different monitor. And that's it. So once again, welcome to Opening Playbook. Please don't forget to complete that survey. And even if you're not brand new, the survey is relatively new. So if you've never filled out the survey, please, you don't need to be brand new to Opening Playbook to do it. We're happy to give you that cheat sheet as well. Even if you've been here for a year, if you haven't filled out the new visitor form, click on that link in the banner above to complete that survey, and we'd be happy to give you that options cheat sheet as well. So now we're going to play the theme song, and then we're going to get into our regular show right at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Such energy shot like a razor blade. This is where the big plays are made. Oh. Charts sky. They spot the trends with a hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategies sharp like a razor blade. This is where the big plays are made. Oh. Step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls from their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the opening playbook for Friday, March 20th. Happy Friday, everyone. Good morning, Nathan. How are you?
Good morning. Hello, everyone. Well, we've got pretty ugly open on our hands, but what else is new? This has been the typical now for, going on a month or so, really. The situation that we're in right now might be a clear downside break, though, or as clear as we've had, at least. This is the 200. I actually put the EMA and the SMA on here just to make sure we're clean on both of them. We ended up right at the 200. I mean, literally within 10 cents of the 200 yesterday on the close. Actually had a little positive overnight for the first half of the overnight session. We're up 0.3, 0.4% at the peak. Then turned around, ripped it to the downside overnight, gapped lower, ran today, and this thing now looks like it is trying to move directionally below the 200. Now, of course, it is 10:02. It is only 30 minutes into the market session. So right now, this looks like about as clean of a break as you could ever want on the weekly chart, rounding down and breaking to the downside. If it looks anything like this at the end of the day, I think you have to be, being at least directionally biased to the downside, if not like aggressively directionally biased to the downside, probably targeting something like, if I can move my line, probably targeting something like this as a potential downside here for the overall market, which would be right about a 12% correction in the overall SPY, peak to trough there. I think the market has been fairly resilient. And so I'm not sure that we could get there. Maybe we end up, if we do kind of get this continuation coming more like into this range, we've had some support there. That would be a little bit more of a reasonable correction. If we get down to here, something like 8.5%, which I kind of said at the beginning of the year, I thought we might get that 8% correction. And then we stayed so steady for the first 2 months of the year, even with tech selling off and things like that. And I thought, okay, well, maybe we actually won't. Maybe we'll just kind of get a sideways churn and burn and eventually find our legs. But then obviously got that late move to the downside. So right now, I think it looks very confidently negative, but 33 minutes into the market session, let's wait and see how this week, ends up looking. Because if it looks like this, that's pretty clear. But if it pops back up, we could very easily end right back up in no man's land here. And the market has loved putting us back in no man's land for months now. So I wouldn't be surprised if we kind of got this flush to the downside. People panicked, got a whole bunch of people short, and then ripped up and ended up right back in no man's land where we have a hard time being decisive. But I wouldn't mind if we got this clear move to the downside here, and then at least could be kind of trading it a little bit more confidently to the downside. Again, maybe 635 as the first level, and then something more extreme like the 600 whole number as that second level. As far as what's driving us here, we can see on the sector view, technology is our big one, fade into the downside. Technology has actually been much stronger the last couple of sessions in spite of, a lot of downside pressure. And so, when it flips and everything else is already pushing to the downside, we're going to get days like we have so far today. Because, even just looking at yesterday, we had a pretty ugly day early on with the market down 0.6, 0.7%. And technology was actually still green at that point in time. But everything else pushing to the downside. We saw gold and silver pushing to the downside. And technology was kind of our safest sector yesterday. And so with all that selling pressure everywhere else, as soon as technology turns to the downside, we're getting these big outsized moves. And I think that'll be the story going forward. If technology can't kind of bail us out and be green, there's really going to be no support for the overall market. Of course, energy still up yet again. The energy sector has been absolutely insane. You can look at it here, XLE. This is what it looks like on a weekly chart. This is the entire energy sector up from 46 to 60. That's, a 30 some percent move. I'll measure it for you right here since we started this breakout, just even above the 8 here. A 32% move just since January of this year. Pretty remarkable for the energy sector, not really known for making 31% moves in the course of a couple of months, but obviously the Iranian conflict and other things have been major catalysts for energy. I personally think utilities is now undervalued. I actually tried to trade utilities last weekend. I thought we would at least pop up into here at the tops, and it just has been sluggish all week long, right at this base. So I'm going to take another stab at utilities this week. I just think it's undervalued in relative terms. Tried to get some upside on it this week, and it just kind of hung out, unfortunately for me. But I'm going to take another stab because I think utilities is probably my favorite win-win sector right now, meaning that if we do get some upside, I think utilities can participate kind of below the surface, supporting some of the tech sector and all the energy requirements there. I think XLU has upside potential in a more risk-on environment, but I also think it has pretty good staying power and upside potential even in more of a selling pressure environment. So I really like XLU right now. Unfortunately, I'm going to take a loss on it today, it looks like. But as far as just, kind of continuing to trade the sector directly, I think it's going to be one of the better ones that can withstand some selling pressure, but also has some upside even if we do get going. And then here's our heat map. It's a little healthier than some of these other flush days, as you can see here. Granted, this data is maybe 10 minutes old or 12 minutes old, but it's a little bit better than we've seen on some of these other days with 40-60 versus, like a 15 to 85 percent ratio. And the mix of names here, obviously you have some energy up here in the mix with energy being strong, but you also have some financials, some healthcare, a couple tech stocks in here as well. And so a couple communication stocks. So I think there's a mix of things that are trying to find a base where we are right now. But again, until that weekly chart shows us something different, I think it's going to be hard to have any bullish bias until we kind of hit another level and gain some support. That said, I think we can start having a bullish bias on gold. with the flush that it had, I'd be more confident to have a bullish bias there, even though it's looking pretty ugly, down another 1%. I think we're getting into a range where I would be more comfortable on gold than I would be on the SPY. So, I guess Graham, that curious how you feeling if you're taking your next stab at the income trade.
Yeah, definitely. We definitely, or I am. It's up to you guys if you will. But I posted in the chat for you guys. We did just have we did just have our first loser this week. Well, not necessarily yet. I took it. Let me go and line this up. On gold, we need about a 2% move today to get back above in our strikes. Gold is fading today, so I just went ahead and booked a loser today at 465. Just selling it back or buying it back as a net debit at 465. We had the 435, 430 strikes. So as you can see, we're about $7 away still just from the bottom strike now. It's frustrating, Nate. I was checking in this morning. Look at this. This morning, look where gold was. Right at 435. Right where we needed it to be to hit our max profit today. Just faded since. Obviously, that drop the other last couple of days has not been helpful at all. So, first loser on the books for the gold trade. Of course, it comes right after we did the training for it.
It's always how it happens, right? Hey guys,
Oh,
I just want
man.
to tell you about this amazing strategy that's 19-0 so
I
far.
know.
You're basically writing your own ticket to a guaranteed loss.
I know.
as
It's
soon
the
as you
same
go
thing
there.
where I said whenever I start showing screenshots of returns, that's probably when it's time to start selling.
Yeah.
Now, hopefully, you guys aren't too upset given that we did offer it at a 100% discount for anyone who took part in that last week. But hey, let's go ahead and look at it again. I am going to be a bit more aggressive this week, given that gold has flushed so extreme. If you look at the Newton momentum, look at this. When's the last time it's been -3 or lower? Let's keep going. -3 or lower. Nope, not quite. Here we go. Nope, not quite.
Wow.
The momentum level or the drop hasn't been this extreme since 2020, since COVID.
Wow.
Yeah. And
And
we
a
all
few
know
things
kind
have
of what
happened
happened
between
right
then
after
and now.
COVID. A nice little bounce across all markets. So just to show you how maybe overdone is the proper way to say this, how overdone this downside move may be, especially given that we're still in a bullish gold environment. And we saw a similar drop here, but again, nothing near as extreme as we've just seen this week. So what I'm going to do is I'm going to just use the 100-day moving average. It's going to be a lot closer to a wrap order on gold. So I'm still going to go out to the 24th of April. I'm just going to use the 100-day moving average. It's 421. I'm literally just going to wrap it here. Going to go for a little bit more juice this week. Now I'm going to check both strikes because ideally, look at the options are pricing going to bounce back on gold. Ideally, we'll get right around 250 here. It looks like it's showing 237. So what I'm going to do is I'm going to use the 24th of April expiration. I'm just going to keep it as a credit just to stay consistent. Typically, if I'm wrapping, I'll do a debit. So if you want to do the debit, you can do that too. Oh, if we get a mid price at 250, that's pretty much perfect. That's going to give us a 1-to-1 risk reward. It's bouncing around a bit, but we're going to be buying the 420 put, selling the 425. This gives us a full month for gold. Let's go find April. Whole month for gold to get back above here. So again, we're just wrapping it this week. I'm going to go for a little bit more cash on this trade. I normally do 500, but I'm risking 2,000. If I risk 2,000 right now at the current pricing, I make 2,000, which means I make back my full loser. I'm not saying you should do that, but I am going to go a little bit more heavy towards the profit side on this, given the extreme move lower. It still could lose, still could not work out, but I think we've got a pretty awesome opportunity here. Let me go ahead and see. Again, the higher the better on a credit. I'm risking 2,000 to make 2,000 here. See if it fills. If I'm right,
How is it one
I'll
to one if
reset
you're
that
getting it
whole
for
loss.
$1.90? Wasn't it $1.90?
No, it was just showing 247 when I sent that off.
What was it?
Yeah, 242 right now.
Oh,
Then
cool.
this is the mid price, 250.
Okay.
Yep. 252 now, mid price. And it's not filling, so let me try and do this. Cancel, replace.
I'm posting it, just updating it.
Okay. Oh, some of you guys had the 423, 424. I was confused because I had a note that I had two on this expiration open, but I only had one when I looked today. Bob says he had the 423, 424 stayer, so I'll let you make your decision on that. If you're able to get out now for probably down 50%, that might not be bad. When did the options chain prices go negative and give us more than 100% losses? Arby, you may have to give us more context on what you are referring to there.
Wow,
I
getting
don't
it
have the 424,
further flush here.
423. I looked because I had a note again that I had two expirations here, or two at this expiration, but I looked this morning, I only had one. Well, if you have 424, 423, you're much better off than I was. Let's see. Man, it's still showing 250 mid. Try one more time. Again, this one's a higher risk, higher reward. Did anyone get filled on this one? You got filled for 255. Man, come on, Pio. You're whooping us all. Oh, there we go. 250 filled for me. And gold is sinking more. So is the S&P. Man, I told you guys in Telegram, Nate, the last 48 hours here, I've been I've been just having an awesome year to start the year, even with the market terrible. Accounts up was up, I should say was up about 15, 20% with the markets down 5%. These last 48 hours, man, I am just taking it on the chin right now, breaking some rules. I was joking with Florian and Jason yesterday. I said, every time I step in and start breaking my own rules and going off what I think makes more sense, kind of goes backwards. So I posted in Telegram yesterday. I said, hey, I think we're going to bounce here. Alex said, Nate, you were on yesterday, right? Yeah. Alex
Yep.
said, well, the Night Rider data, the GEX, it was 9.2 billion negative, which I think the biggest one most recent was 3 billion negative, pointing towards the downside drop big time. So,
Yeah.
hey, I broke my own rules, and it's been a painful 48 hours. I think I'm about 5% or so off my account highs. So hey, it happens in trading. Happens to all of us.
Yeah, I'm actually I am
Well, Progressive
going
is
to
up 2% today, so your account's got to be big.
yeah, that's it. Finally, progressive. Let's not look at progressive on the weekly chart, but yeah, today, great. No, I'm actually going to take a little stab on the zero DTEs here just to see if we get a touch back up to that moving average, because you can get pretty fantastic ROI on a bounce here. Now that we already bounced about 0.25% though. Shoot,
Scott here said, remember at the start of COVID, we had one limit down day. That was crazy. I was in Canada when that happened, when the markets froze up because they shut it down. They used the what is it called? What's that called?
What you mean when they limit
When they freeze
it?
the markets? Yeah,
Yeah,
the tripwire hit the tripwire.
Yep.
Scott said, and he says, so far this entire war move is barely that one day down move. I think that's the painful part.
Yeah.
If we could just get it done in one day, that's awesome.
Exactly.
Do you think
That's
maybe the market wouldn't have frozen if you were in America and they knew you were here to
Yeah,
help?
that's it. Yeah.
Yeah. Like
dang it,
maybe
I
don't
can't get fit
maybe,
on this trade.
I
maybe
had
don't
to
abandon us
I
next
had to
time.
like move my flight because they were about to shut the border, which is crazy.
The market froze, so they were shutting the border.
Oh, I think the COVID.
I think they were worried about people dying, Dave. Okay.
Yeah.
Jeez.
Yeah.
All right. Sorry, I'm trying to get fit on this trade
COVID.
because I want to play a little bounce here to see if we get back up toward that moving average and make like a 3-to-1 if we get a run, but I can't get filled.
Chris says, do you ever say just step away? I said that yesterday about 11:15 a.m. when I kept losing. I told Florian, I said, I'm logging off for the day.
Oh, there
Everything
we
I'm
go.
everything I'm doing is backwards. But Chris,
Well,
honestly,
you
this last week, if you were here Tuesday, I told you guys have a prediction for you. Like this is a week, probably two-step away. Now we do have a flush below the 200-day moving average, so we're getting some more clarity. Granted, it's the opposite of what I bet on yesterday, but up until now, last 2 weeks have been a step away type of period, Chris. And when I say step away, I don't mean don't pay attention. I mean probably just don't risk a lot or any, but keep your head in it.
The way that I'm going to try to do it here is I'm going to see if we get a little bounce back up in a test because we flush pretty quick on the gap and run. And then if we get that, I'll try to take some profit and actually reverse and go to the downside. I'll try to, I'm gonna try to get a little cute here and play both sides. I do have that hedge on that we put on closing playbook whenever we did that. So that one's fully in the money if you guys actually want to take profit, because I do think we might get a little bounce here. Let me actually go ahead and take my profit. Sorry guys, I'm bouncing around here in the middle of trading here. Let me go ahead and take my
Which asset are you talking about? SPY?
that's the 659 660 puts we did on closing playbook, which are fully in the money right now.
Well, we did 659 660 that were part of an iron condor. Do we do them separate?
I have the separate hedge here, traded below the 200 moving average. How many days ago was that?
That's
I
okay.
don't know. It's not showing in my thing.
All right, it's fine. I was just trying to keep track of it a little bit. We had the one we did literally yesterday, not yesterday, 2 days ago. On Wednesday, we did a long put. Kane did a long put condor that was 659 660 and then 672 677.
This one looks like it's from last Friday. Yeah.
Okay.
So I can get 93 cents out of the dollar for that right now. And then I have a March 31 as well. So Dave, I have that one as well.
Okay.
All right. Sorry guys. I'm going to jump in here in a second. So I think there might be a pop. So I just want to try to take profit on the hedge and see if I can play both sides here. If I can get 95 cents out of it, I'm going to close it right now. So that's what I'm going to try to do here. Almost 1% below that line. All right. Moving on. Sorry, folks.
Graham,
moving on.
Graham, you want to answer Charles' question there? If gold is...
Oh, I just did.
Okay, cool.
Close.
Okay. So today we are going to talk about Palantir. This is a stock that I think is an interesting one because it has a lot of different dynamics, kind of like a tech stock, but also has most of its basis on, well, not most, as we'll see today, but a lot of its basis in government contract. It has a couple interesting valuation components. It is down about 20% or so from the high. So the question for Palantir is, hey, is this a buy? We're 25% down from the highs. Is Palantir a buy the dip? Or is this one of the leaders to a tech collapse? Or we should actually be shorting this thing down to the dust. And so I'm going to go through this probably a little bit quicker today. We have a lot going on today, roundtable and everything else. So I'll probably go through a little bit quicker today. But if you guys have questions in the chat, let me know. I'll obviously be happy to pause for those. But I think maybe 15 minutes we can get through the main pieces on Palantir and then move on because we do have so much going on today. But of course, Palantir is a tech company, software and infrastructure. They have a pretty huge market cap at $372 billion relative to how old they are and their total revenue. You can see revenue at $4.4 billion, market cap at $372 billion. That's a pretty big gap right off the bat. They are very profitable. They do have very, very good growth. But as you can see here, we rank them pretty low on evaluation because the valuation is just so darn high. The reasons for that, again, profitability, growth, their financials have looked really, really good on this trajectory since about 2020. I think they IPO'd in 2020. And so they've been on a pretty amazing trajectory of growth since then. From a price standpoint, they're pretty mixed. Again, they have that that 20% correction, but they also were so high they're still above the 200. Not by much anymore because they've come down a lot, but still above the 200, and just recently kind of flipped back above the 20, but they're below the 50. So we call that a mixed overall regime, and we'll see that on the chart here in a second. Here are those growth numbers I was talking about. Just been a steady climb here. This is going back just the last 8 quarters or so. We'll go back a little bit further in a minute, but you can see in 2024, just 2 years ago, they were putting up $129 million quarters. Fast forward, now they're putting up $700 million quarters. And so that is the reason for Palantir's massive rip to the upside, and why the valuation has gotten so aggressive. It's kind of because of that forward PE thought process. Like, yeah, it might be too high to value them now, but at this growth trajectory, it's going to be hard to outpace the value of Palantir, and they have put up those numbers. So that's a very reasonable expectation of that forward PE coming down, because they have literally put up the growth numbers. One nice thing about Palantir, even though the valuation has gotten crazy, is their debt to cash is very, very positive. They actually don't have the long-term debt of a lot of these other companies. Now, there's a couple of reasons for that we can get into maybe just for a minute, but just note for right now, compared to a lot of the other big tech companies, Palantir does not have that ugly debt to income ratio. Again, here's those earnings numbers. You go back to 2020, they were a mildly profitable earnings per share and a net unprofitable company in terms of net. Take that all the way to the last quarter of 2025, and you can see the EPS has grown dramatically. The net earnings have grown dramatically. Earnings surprises have been pretty steady, not amazing, but pretty steady. But again, the trend just very, very positive on a net EPS for Palantir. Now, again, that's earnings per share. That's what they're actually giving to their investors. The company itself didn't even flip profitable until 2023, I believe. So we're talking about what the ROI for investors is right here, not necessarily the company itself. We'll get into those numbers in a minute. And you can see, again, the forward PE is what people are expecting to continue to come down. So the share price going up, forward PE going down, similar to what we saw with NVIDIA in like 2021. And their growth so far has sustained that. But the question is, well, if they run into any trouble with that massive PE and forward PE expectation to come down, and it quits coming down, and the current PE flips to the forward PE, because that's exactly what can happen, right? The real PE is 300 right now, but people say that's okay because the forward PE is 100. But then if the growth slows down and they say, well, we thought it was okay that the forward PE was 100, but now it's not, and the current EP comes to that number, they meet in the middle, well, what that means is the stock price is going to be cut in half. So that's really what you have to watch for on the risk of the high-flying earnings companies. Here's that revenue number. Oh, I didn't take this all the way back to 2020. I thought I did. I'll show you back to 2020, a different view. But again, just quickly to show the growth number is really good. It's better to see it back from 2020. And I think I have another chart for that. But you can obviously see, again, the growth there. Here is the EPS. Do I have the net numbers on this one? I don't think I have it on this chart. I think I have it in another chart. But PE 250, forward PE 119. Again, that's saying the growth is so good that it's okay to overvalue them now because they're going to catch up. All right. That's the idea here of these mega growth companies. Here you can see the price chart and that pullback that I'm talking about. They have recovered some since the February rip to the downside. And now we have all these moving averages kind of converged in a tight range. And so that's one of the reasons I want to talk about Palantir today, is because I do think it's in a decision point right now. Massive rip up, pretty massive correction down. They've rebounded some. Those moving averages have coiled, and now they're at a decision point of whether they're going to go up or down. You can see that Palantir is a very responsive stock to being overbought and oversold. That's why I like to look at this RSI. It kind of gives you an idea of the behavior historically of the stock. Does it react to being overbought and oversold as a volatile stock? For Palantir, the answer is yes. Essentially, every time it's oversold, it's bounced. Every time it's overbought, it's sold, and back and forth we go. Right now, again, we're pretty much in the middle. So we got oversold there. We did bounce, and now we're kind of, again, in that decision point where I think we could easily go either way. And because it's Palantir, we could easily go either way in pretty dramatic fashion. Nothing really to see here on the volume chart. Palantir is a high volume stock, but it's a very mixed high volume stock. Average volume is about 701 million. So again, high volume, but it's a very, very mixed volume stock. So I won't waste any time here. It's always going to be high volume unless it kind of falls off out of the headlines, out of the retail traders' top list of stocks, which it has consistently been. And so it's just going to be a mixed volume across the board for that reason. I'm going to pull up the options volume here. This takes a moment to load because it's pulling in the actual options chain. So just give this a minute. We need the Jeopardy music.
Even singing that, even me singing that would be a crime. I can't sing at all.
Same. So here we are with our options volume. Obviously, it's a high IV stock. This basically means, hey, do you want to buy Palantir options? They're going to be pretty expensive. That's because it's a high volatility stock. Options are going to be very, very overpriced. Now, what's interesting is that the options have flipped certainly to the bullish side. If we would have looked at this a month ago, we would have seen the gamma exposure was more negative. Now, because Palantir has moved to the downside, most of the gamma has flipped to the upside. Now, I don't have the deep gamma view that Kane would give you, but just generally, the gamma has shown to the upside. If you guys have Kane's GEX, you could look at this more particularly and look at the expiration dates, but I think you'll see something similar, that most of the bigger levels have flipped to the upside once it got oversold. Now, I think that's probably a lot of institutional money in there. Now, it could be institutional money that's hedging against short because Palantir does have some short float. I would guess it's actually more speculative, and that Palantir, because the numbers are so good, the growth is so good, and they have very reliable growth, that once they got oversold, some of the long-term institutional volume came in. Does anyone know why Palantir's growth is so confident and reliable? I'm sure some of you know. There's one reason why, even in a pretty challenging environment, Palantir's growth and expectation of growth is going to be very, very reliable, much more so than even most of the other tech companies that trade amongst themselves. Yes, you guys are right, the government contracts. So Palantir, about half of Palantir, actually a little bit more than half of Palantir's total revenue is government contracts. And so when they get undervalued, I think institutions look at that and say, yeah, listen, they're undervalued. Things might get a little bit dicey here, but they've also got $1 trillion over the next 3 years that's coming in that we know is guaranteed. And so it's going to be hard to get them too undervalued for that reason. And you can see, by the way, the IV skew has really flipped here into that normal positive curve of basically saying, yeah, you want to buy calls 90 days out, 120 days out, you're paying big money. The market makers are not valuing this as a put skewed asset at all.
That's like which one of those 3 companies that you recommended we buy have like 80% pre-sold? Reminds me of that.
Yep. Well, we'll talk about that in Closing Playbook too, actually, by the way. So they have 5 years, fiber optic companies. They have 5 years worth of orders
Yeah.
So it's kind of in that realm. Uh, Analyst ratings on Palantir are not as positive, which is interesting, but it's a lot because of they hit like I think they might have hit a 400 PE. Someone can check. I think they might have hit a 400 PE at some point. And at that point, pretty much everyone, that would have been mid 2024, late 2024, everyone said, well, not so fast. I don't care how fast they grow. At 400 PE, they're going to be hold and sell recommendations for most of your typical advisors and firms, because 400 PE is just insane. Now we're still high, but not in that level. And you can kind of see later here, we've have flipped the last couple from later in 2025 and into 2026 have actually been upgrades compared to in 2024, where things got really crazy and you see these downgrades from where that valuation just got absolutely insane. Here's a seasonality look. We're not in the prettiest seasonality period right now for Palantir, but it is a pretty short history. Obviously, they have not been around long. 2020 they IPO'd, so they had a measly 167% gain in their since in their initial month of IPO. Since then, the beginning of the year has been pretty dicey, but the middle of the year has been really good. And I don't know if that's partly because of just the way that their earnings numbers come out with those government contracts and the way that those are cash accounted or GAAP accounted or something nuanced like that, or if it's just happenstance. I haven't looked that deep, but we do know that the middle of the year has been really positive for Palantir. I built this dashboard. So everything you're seeing here is just something that I've been building over the last couple months because I wanted something that I could kind of do my own version of a deep dive into a stock with a little bit less effort, frankly. And so this is the dashboard that I built. And so that on Fridays, I just kind of give you guys a peek behind the curtains to an individual stock. This is the insider transactions. It is very net negative for Palantir, but I put almost zero stock into that, no pun intended. So one of the things that you'll see about Palantir is that they were probably, and I don't have a data point here, so I'm going to say probably, they were probably one of the most aggressive companies in history in terms of paying early employees in stock instead of cash. And it's funny because, not funny, but it's lucky for them, I guess would be the better word. It's lucky for them because they IPO'd in 2020. Even before that, when they were private, they were paying their early employees in preferred shares and all of that, continued to do that in the first couple years of the company. And what that does, for those of you who don't know, that makes your balance sheet look really good. When you say, hey guys, we pulled in 50 million this quarter, we owe our employees 20 million of that, but instead of paying any of that out, we're just going to give them, preferred shares, diluted shares, whatever. And now $20 million that's supposed to go to your C-suite executives and everyone else just go straight to your balance sheet as cash. Well, that makes your business look a lot healthier, right? So that Palantir was one of the most aggressive ever to do that. And the reason I say they're lucky is because they happen to have 2020 and 2021 to absolutely rip their share price up and make those numbers work instead of hitting, 2022 or some big flush after the fact that would have made those numbers really hard. Because if Palantir, either had people cashing out or needing the cash early on in the life cycle of that environment, they would have had it been in a world of hurt. But instead, they timed it right. In 2020 and 2021, their stock absolutely ripped, and they were able to kind of get out. And they've now they're a lot healthier in terms of that reality. News for Palantir, I mean, it's pretty neutral, probably a little more bullish because of the conflict and things that are around, anything that has government contracts, at least a defense or defense adjacent focus. There's a lot of potential tailwinds in the current environment. So slightly positive for Palantir, not overly positive because we are in probably a net negative news environment. But again, Palantir kind of defense adjacent, and I think that bodes well for them. Here's those numbers I was talking about. You guys can see the government contracts versus regular money, and then I have it broken down from U.S. commercial to international commercial just so that I could look at it. As we go through here, you'll see the government contracts have balanced out to some degree. We can see in 2021, it was 894 million in government contracts versus, whatever 600-ish, 520-ish in total commercial. And we have balanced out some, but you can still see, the government making up a massive proportion of Palantir's revenue. And that's very reliable revenue. They kind of know it's coming in. They don't have to doubt, that next $2 billion is coming in next year. Good old Uncle Sam is going to make sure that hits their balance sheets at some point. So that's one of the reasons that it's hard to get too down on Palantir because such a big chunk of their revenue is coming in. Here's what I was saying about 2021 and 2022 actually being negative. So you can see here, negative 33.7% margins, and that's with paying out a whole bunch in stock. So really, they were much more aggressive than you even realize when you see that negative 33%. Throughout 2022, they got healthier, which was really impressive, I think, to the institutional investors. In the 2022 bear market, Palantir was getting healthier over time, and I think that's one of the reasons that come 2023, they got a lot of institutional backing. Their margins turned net positive. 2024, more positive. 2025, much more positive. And so they, to their credit, and in spite of probably being one of the most aggressive companies ever on the IPO side of things and trying to stack the deck for their books, to their credit, they have gotten healthier every year since then. So it's not just top line, bottom line, even through 2022, have gotten healthier every single year. So that's kind of what you have to look at from the Palantir side of things is, yeah, the PE is crazy and has been even crazier, but if they keep hitting those growth metrics, the numbers are going to make sense. If the growth continues, then the stock price is never going to have to pay the piper for that PE because it's always going to be going down in relative terms on that PE. We rank this as the top on the peer comparison. However, I don't really think it's a great peer comparison. Palantir is pretty unique. They're not actually a defense company. You're not going to compare them to Lockheed or Boeing, but they're also not really a normal technology company. So they're tough to really get a clear comparison on. But because of their revenue growth, because of their margin numbers, it's just, it's going to be hard to rank them super low, just like you would in NVIDIA or something like that. Let me see. I think I had one other chart that I was building on the side here. Let me see if I have that. Give me 1 second. I think I might have one more that I was going to show you on just that net negative number. Maybe I don't. Okay, maybe I don't. I thought I had one more chart that kind of showed the negative to positive ratio just in kind of a cleaner PE chart that you could see it going up and flattening out. I had that somewhere, but maybe I didn't actually get it finalized. But it basically shows, yeah, like the PE has gone up and it will continue to go up in probably any good tech growth environment, which obviously is slowing down right now. But it's not going up like this. which I think people think of when they think of the Palantir stock going like this. They think, okay, the PE ratio is going like this. In reality, it's really going up, but kind of flattening out on the way up because the growth is so good. So I just kind of put that in a visual term. I don't know where I ended up putting that, but that's, that's very similar to what we would have seen in NVIDIA in 2021 or 2020. And people said, hey, PE is getting high. It's overvalued. It can't keep going. But NVIDIA's argument was, well, yes, it can, because the growth is so fast that even though the PE curve is high and it's going up, we're going to outpace it on a actual underlying growth. And so, Palantir is basically saying they're in the same boat. Now, does that make Palantir tradable? Well, let's take a quick look at it here on the chart. So Palantir, in my opinion, is sitting right back on top of a key level that I was not sure that we were going to see again, maybe even all year. Once we broke below this 150 range, I thought things might be really ugly. We might test here and rip down. We might be $100 stock in a relatively short period of time. But you can see, I mean, Palantir is a pretty big mover. It has some massive swings here. This swing in 2025 was about 46% on the underlying stock, peak to trough here, and then obviously continued up. From that trough, we went up about 207% on the underlying stock in 2025. So it's not unusual for Palantir to make some pretty massive moves. I think right now is a nice decision point for Palantir. That's why I wanted to cover it today. We're sitting right back on top of that 150 level. And to me, I would just make a very binary trade here. If we cross back below this level, let's call it 148, I think it's a clear short down to the 125s, maybe even down to the hundreds. I think it looks much more like a continuation move from this drop. And I think it's a clear short at that level. Again, I wouldn't do it like where I'm holding short interest on the stock, because I can't be that negative on Palantir because for the reasons that we talked about today. I can't be quite that negative on Palantir, but as a risk-defined trade, hey, I'm going to risk $500, and if Palantir drops to 120 or 100, I'm going to make $5,000 or something extreme like that. From a risk-reward standpoint, I would absolutely trade it to the downside if it breaks back below here, considering that a continuation. At the same time, if we break just a little high here, just 160, I think it's a clear long, trading it all the way up to the 190, 195 range, because now this looks like a continuation. Okay, so is everyone following me here? If it breaks down, it makes it look like this leg is a continuation. If it breaks up, it makes it look like this leg is the continuation. I could fully buy either one. I think both are tradable, and I think Palantir, it's just a pure price action opportunity, in my opinion. So for me, that's the idea on Palantir. But as always, let me know in the chat how you guys rate Palantir. A, you think it's the greatest stock in the world. C, you think it's an average stock. F, you think it's a terrible stock that we should start shorting right now and not wait a moment longer. Let me know how you guys rate Palantir in the chat. But for me, pretty much a binary price action trade. I mean, we can just draw these two lines if I get rid of this. Right here, let's call that 161. Right here at these lows, let's call that 148. Above 161, I would probably use the weekly chart. So I wouldn't, I'm on the daily right now, but I would probably use the weekly chart as my basis. Weekly close above 161. I'm going to take a risk-defined trade with a debit spread targeting near the all-time highs, somewhere in this 195 range. Weekly close below 148. I'm going to target 125, but I'll probably even split contracts and go for something more extreme by the end of the year, like $100 or something on Palantir. See if I can get a 12 to 1, 15 to 1 risk reward. I actually do have a long position on right now that I got pretty close to the bottom. I'm not sure what the underlying was when I bought that trade. Something in the low 130s, I believe. I didn't quite get the bottom. It ended up hitting 125, but I got a pretty great price on Palantir with a current trade that I have targeting all-time highs by the end of the year. But I would certainly add another leg to the upside if we get that move, and I would add kind of a hedge leg to the downside if we get that move. Looks like pretty mixed on Palantir. I probably think it's a B rated stock. If the valuation wasn't so high, I think it's an A plus. But it's going to have to contend with that PE, and if things continue to be rough in the overall market, those high PE stocks are going to be ones that people want to needle down on. So for me, that's that's how I would rate it. Like, yeah, great stock. I love that it has gotten healthier and healthier, not just as a top line, but as a bottom line. Again, reminds us of Nvidia, just a few years lagging behind. And so I think that's very positive, but it almost doesn't matter how positive it is if the overall market is going to push, because it's going to push on these high PE stocks. As a matter of fact, let me show you. Here's a great example specifically on Palantir. Here's what Palantir looked like from 2021 after it made that big run all the way into mid to late 2022 here. Stock was down 80, 90%, something extravagant to the downside here on Palantir, and yet the company was getting healthier all the way along. Now, they did start missing some earnings because their forward projections were so high at the end of 2021, but they were missing earnings while still net growing and getting healthier as a company. So you can see here that by the way, Palantir, people say Palantir is super earnings dependent, super forward guidance dependent, but it started going down way before the earnings turned negative in 2021. Again, just valuation wise, people got spooked, and then obviously once it hit those lows, has been an amazing stock ever since. So for me, that's the trade I would take. Go for an outsized risk reward and see if Palantir can gain some momentum in either direction, because it's a pretty great momentum stock. All right, folks. Well, we have a roundtable here at 1 o'clock today. I'm looking forward to seeing everyone in there. We're talking about triple witching, because it is indeed triple witching. I think we've got a couple interesting things to look at there because there is so much exposure right now with the big move in the market. So looking forward to that. And then we also have, what's that?
I just posted the link.
Oh, thank you. They posted the link there. And then Graham also asked me to mention that his perfect income trade is coming out too. So if you guys want to check that out, we can play that presentation in here as well, because that is right around the corner. So a couple things on your radar today between that and roundtable, and I'll look forward to seeing you there.
All right. We'll get that going here in just a second.
Again, you guys know the drill. Profits, performance, not typical. We're not going to guarantee any future earnings, because of course you could lose money on any trade that we talk about. But every single trade here is based on real trades sent out in real time. This is not back tested, not paper money. The average return here, winners and losers, 32% per trade in 4%. Guys, that's winners and losers. That's that average return we were talking about. 66% win, and there's my favorite number, an average win of 93%, even though most of these stocks barely moves. So obviously can't guarantee specific future results. There's always a high degree of risk. If you want to go through, just go to Prosperity Pub and you can read all of that. So welcome. If you guys don't know me, I'm sure you do. I'm Nate Tucci. I'm the publisher here at Prosperity Pub. And when most folks are paying, $500,000 or even more to trade popular stocks like Apple, Nvidia, or Google, one Florida-based trader discovered a new way to tap into what could be some of the most cheap options in the market that you can take advantage of. Trades costing